Hi, this is Randy Finney with the right side of the chart, and today is Friday, July 28th, 2017. It is about 10 till 3 Eastern Time as I'm starting this video, and this is the third of 3 videos so far today covering sectors that stand out to me, be it whether it's commodities, stock sectors, anything else. In this case, precious metals. So I'll cover the precious metals, gold and silver, maybe touch on platinum, and along with the mining stocks, GDX. A lot of those miners aren't exclusively gold miners. They pull silver out of the ground, and I imagine to a greater or lesser extent platinum, palladium, some of the other precious metals. So let's start there with GDX. I've remained cautiously bullish on this one for a while, pointing out these series of divergent lows. Most important thing to watch, these purple lines show this large falling wedge type pattern confirmed with bullish divergence. We had a divergent low back here, nice rally. We had another divergent low back here that was pointed out recently, nice rally. And now we're at the top of the wedge. So the theme of this video will be that I remain, my longer term outlook remains bullish on gold in the mining stocks. However, we're at an important technical juncture. It looks like we may be poised to break out. However, as I often say, the initial tag of resistance, when we haven't hit a resistance level, such as this downtrend line in a while, the initial tags often produce reactions. Now, sooner or later, the nature of a wedge, it contracts and you have a breakout. We could break out soon. We may come back down. Point being, we're at resistance right now, and resistance is resistance unless taken out. At that point, it becomes support. So, my point being, it's not objective to go long here if you weren't already long, and if you are long or you're looking to get long, you want to wait for a convincing breakout. And most importantly, in my analysis, as any of you that have followed the site for a while know, I do not trade GDX in a vacuum, even though the gold mining stocks are my preferred trading proxy for the metals, because if you get the move right on the metals, on gold or silver, the magnitude of the move is a lot higher in the mining stocks. So they're simply a leveraged play on the metals. And now, with that being said, I don't trade them in a vacuum, meaning solely on the charts of GDX. You need to see gold and silver and the U.S. dollar all confirming, because the metals are also they have an inverse correlation with the U.S. dollar. All right, so this is GDX. That's the daily time frame. Bullish case is there. We need to see a breakout, ideally on increased volume. We need to see gold and silver confirm, and we need to see the dollar break down. And I'll get to that in a second. The dollar's at also at an important critical juncture. Let's just jump down to the 60-minute charts to try to hone down our timing. I haven't even updated this chart in a while. These were targets back here, I guess, on a previous trade that was hit. And then we had a divergent high. You can see right here, this line, price is making a higher high. This is negative divergence. Down here, we actually had positive divergence. Again, I haven't updated this GTX 60 in a while. I have a core holding long-term accounts, but I don't have anything in my trading account. So unfortunately, there missed a lot of this move in the trading account. This was a pretty nice rally, and you can see the falling wedge. Now where we're at, you could look, we're certainly in an uptrend. Now, I'm not crazy about this uptrend line because it only has a couple reactions, but it's something to watch. So either way, you can see some resistance overhead. GDX still has some work cut out for it, especially on this 60-minute chart. But again, the bigger picture, if you're a swing trader or an investor, is to watch this. Now let's jump into gold and silver real quick and look at those charts. Gold looks pretty nice. It's been chopping around within this large range here for most of the year, throughout all of 2017. Now, the swings have been pretty big and pretty directional, so there's definitely been some swing trading ops. And again, this is, what differentiates an investor from a swing trader. A swing trader can profit long and short on these rips. Not that I caught every one of them, but they were there to trade. Sometimes I just lose my focus, or if my confidence isn't very high, I just don't spend much time on the metals until I see something really compelling. Now, I do see us breaking out of the top of this range. We had this reaction high back here. Here, let me box this in for you and just show you what I'm seeing. This is sort of the range that we've had here. We've had these two peaks up above it, but we've had quite a few reactions that have stopped at this level. So it would be bullish. We're looking at a potential bullish cross on the PPO. I like to see the signal line, the 9 EMA, which is the white line cross up below there. That indicates the trend is bullish. But as I often highlight, when you get caught in a sideways market or consolidation, trend indicators don't work well at all. You get whipsaw signals as we had here. Actually, that's the only whipsaw signal. Remember, I used the 9 EMA, not the PPO line. That's the last to cross over the zero line. The zero line is this dotted line down here. And in doing so, it gives you a lot less whipsaw signals. So right there, we bounced perfectly off it, kept you in the trend, gave you a little whipsaw signal there. It shook you out, but it told you to get back in. Then it said get out. Either way, these trading ranges don't last forever. So if we get up above here, the white line, the 9 EMA, that would be bullish. And if gold is in a new bull market, if the bear market is over, that ended back in late 2015. Then don't worry about this overbought reading, because as I often state, overbought tends to become more overbought or stay overbought for an extended period of time when the primary trend is up. So, and on the flip side, oversold tends to be very fleeting, those oversold readings. Now we had an extended oversold reading here. Again, you can look at the chart of gold. It's just the last couple years have seen some big rips up and down, and you step back on a longer term time frame, and the story is this. Here was your bull market. It even goes to the left of this chart here. There was a bull market top. We had a bear market that so far apparently has bottomed in late 2015. We had a breakout of this downtrend line, this contracting channel pattern. We back tested it and we moved higher. So my long-term analysis I've covered several times. We need to see this line go out right here, about 123.16 on GLD, then those previous reaction highs around 132, and that would greatly firm up the longer-term bullish case. So that's gold, and I don't see. Oh yeah, I wanted to cover one thing with you guys: 60-minute charts. Here, series of divergent highs and rising price channels. Those are those trends I just pointed out on the charts. Look like a W pattern here, up, down, seesaw. And you go long, you see a divergent high and then a trend line break and a back test. That's your chance to get out. You see a downtrend line, pretty well formed, then a breakout, and then divergent low. You had bullish divergence at the low. There's your get long. Now we have an uptrend, rising price channel with potential negative divergence. Now I say potential because the PPO is still pointing higher. And if we go much higher, you can see here these lines are almost flat. We're almost equal to those previous peaks. We have the potential to negate or take out those divergences should gold push up much higher. So again, my point being, we're at an important technical juncture. If gold takes out those divergences, that greatly diminishes the case for a pullback and a potential breakdown of this channel. But until they exist, I would just say this. It's not a good time, in my opinion, to establish a position if you're already long, especially if you're a longer term trader. Set some appropriate stops, maybe somewhat below this 60-minute trend line here on this 60-minute chart. But I do favor longer term, even if there's a pullback along the way. Maybe we can buy gold back here. I favor more upside. Let's look at silver. Silver's looked interesting recently. Let's just focus on the daily chart. Keep this kind of quick. We had a very clean and clear divergent low. You can see prices making a much lower low, a little flush out move below this key support zone. This was, back here. I indicated that as a buy support zone for silver when it fell to that, and we got a nice rally off there. And just like on that other chart of gold, you can see a series of bullish divergence, positive divergence at these lows, especially when you get these on the daily chart. That's where you see good opportunities for swing trades. You had a nice rally, a little correction, one thrust up to a marginal new high, which was a divergent high. That said, hey, we're at divergent high at resistance at 1765 level. You can see is a very good resistance. Time to get out. And we had a correction. a little flush out move. We put in strong divergences and then took out the downtrend line. So that was bullish on silver, and I don't think this trend is over. I think there's more upside to go. And however, these are resistance levels, each of these lines, and I should add another one right here at the top of that reaction high. Comes in, gets that reaction low, that gap there, gap back here, reaction highs here. So that's a very significant line. I'll even mark that for you. I didn't zero it out, but it's around 1683. Here, let's make it yellow so it stands out. So there it is. The longer term, intermediate term case is bullish. The near term case, we could get a pullback here soon. We may not. A lot of that depends on the dollar. We'll look at platinum because a lot of people forget about that. PPLT is one of my favorite trading proxies for platinum. It's the ETFS physical platinum shares. You can see this bullish falling wedge pattern, divergent low, and we're poised to break out. Platinum hasn't broke out yet, but it sure looks like it's poised to. Maybe one more thrust down within the wedge because we're testing. We have that PPO has been below, the signal line has been below the zero line since this crossover here. And look how perfect, look how well that acts as a resistance when tested from above. And now, again, we're talking the white line, not the blue line. Boom, failure, boom, failure. And we're right there now. That has kept you short or told you don't go long yet. It's in a downtrend. So on platinum, you want to see a solid break of the 9 EMA, the signal line above that zero line, as well as a breakout, ideally an impulsive breakout above this level here. And then any of these are potential targets down the road. So that's platinum. All right, let's take a quick look at the dollar. My chart of DXYO, they had some snafu on this charting platform, TC2000, showing the dollar index jumped all the way up here. That's not the case. If you want to check, you just look at the ETF UUP, which is down today. We're down at that support level. You guys recall back here, I pointed out there was bullish divergence, what looked like a bullish falling wedge. But unlike I might normally do, or where I would look to position for a reversal, I told you my expectation was for a continued move down here. That was in one of my recent analysis on gold and the dollar, and that's exactly what happened. So we came down to my target. This is a key support level. Now let's look at it on the dollar index. Okay, this is on another chart. This is on stockcharts.com. So chart's a little big for me to fit it. I already have the this chart shrunk down. I don't have it fitted for the same video capture, screen capture size as the other charts. But there's some notes on here, and I might have a link to this on the site. I'm not sure. Either way, this is what I've pointed out in recent months is this key support shelf right here. I probably should change that color code here. Let me change this color, give it a blue box. And so we have this big topping pattern, and the bottom of that level is very key support. We've had a few brief intra-week breaks below there, but the dollar's flirting with support, and I've maintained, and again, my DXYO chart, which is the also in the dollar index. Just some charting services use DXY. Others, like stock charts, use USD. It's still the US dollar index. My expectation for quite a while has been a breakdown of this level. One of those reasons why, let me color this other trend line here. We have this large divergent high. If I show you that blue line there, you can see this negative divergence. Again, I'll slide that up in a second. I realize some of the charts cut off there. Let me do that. Okay, now you have the indicators down here. They were pushed to the bottom of the screen. So there it is. Big negative divergence has been building for literally now about 2 years that tell me that the dollar is in for one heck of a correction, especially if this key support level breaks. That would be uber bullish for gold, and that is my current outlook. That's been my outlook since we were up here at the top. You can see there's a little trend line breaks. Sure, we're oversold, so it wouldn't surprise me, and this is again why I have a little, I'm giving some pause right now or tempering my bullish outlook for gold in the very near term because the dollar just hit this level. the dollar index. And I would be surprised not to see at least a reaction, a bounce, if it's going to go on to break down. But anything's possible. You know, we've had big moves here, and just when you thought you couldn't get any more overbought in the dollar, we continue to rise. So we are oversold, but as I often say, oversold can become more oversold. Or stay oversold for an extended period of time. It all depends on the trend. So there it is. Dollar at support, key support, GDX at resistance, gold, silver, things like that, platinum at resistance. So we're at some crossroads here. We may have some good objective long-term entries here real soon. I'll continue to monitor these charts for you. Here's that DXYO or DXY dollar index on TC2000. Again, it's showing that erroneous candlestick there, that 3% big jump there. That I don't see that on any of the other charts, but you can see the divergences. You can see the overbought readings. I showed you these other levels every time we were overbought, how big the correction in the dollar was. So if that breaks, oh, and there's one more I want to show you, and we'll wrap it up here. The euro is by far the largest component in the U.S. dollar index. And this chart, let's go to a weekly chart. You look at this basing pattern here. Again, what we're looking at, this is the euro versus the US dollar. So the pairs combined, the euro US dollar index. So the euro versus the dollar. And so you can see here, we were in this triangle pattern. We broke down. That was that sharp rally in the dollar because that's the euro falling against the dollar. And for the last 2 years, just as I showed you that top high-end consolidation pattern in the dollar, the euro, unlike the dollar index, because the dollar index also has, to a lesser extent, the Japanese yen is the second largest component, and then all the rest are distant as far as their weighting. The euro by far, I think if I remember right, I think it's like 57% of the dollar index, with the yen somewhere around 13 or 14. Again, I'm just going off memory. So there it is, bullish divergence, and this is a breakout. So this is what is steering me towards more downside in the dollar and a break of that range, and that'll have longer term implications. We're looking at a 10-year weekly chart here, and this looks like a pretty convincing breakout so far. You see 2 other pops above that top of that range, and it's pretty well defined. Both of those were intra-week basis. If you're trading on a weekly time frame, nothing but the weekly candlestick close matters. These intraday pops, and that the reason what I'm referring to is that narrow line, that's called a candlestick wick. Or shadow, and that just means that intra-week prices got above but failed to close above, close back down under this, the top of that trading range or resistance. Now we have a breakout. We had a breakout last week with a solid green candle close, and we're following through today. So there it is. I think the euro's headed higher against the dollar in the coming. This isn't a short-term call either. This is weeks, months, possibly years. Can't rule out a back test. Sometimes breakouts do see a back test. So let's just see what happens. Let's not jump the gun too early, because with the dollar being at support and the euro being quite extended in this recent run, and the dollar oversold, the odds for a oversold bounce in the dollar are pretty good right now, and that could put the brakes on the rallying gold. So there it is, guys. I hope it's not. I didn't throw too much at you, but I think it's important to take all of these into account when trading anything as simple as GDX, or whether it's gold or the individual metals, if that's your cup of tea. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.